We were, for years, in a buy-the-dip market. Always made sense because it kept going higher. And anytime you got even a 5% a deal on the stock market or a correction, whatever you want to call it, made sense to buy it. We got to a point where people were saying sell the rallies. Where are we now? Sell the rallies or buy the dips?
Buy the dips.
We are back to that.
Yeah.
You sure?
Yes. We're positive that there are some opportunities in the market. Where I think we've seen a change is you're actually seeing a little bit of a shift in the market towards value versus growth. So people have been talking about there's been a huge divergence between growth and value for years, and everybody's been talking about when do you have some sort of revision back to the mean. And what's interesting is if you look at forward earnings for value stocks, they're actually growing at a higher rate than forward earnings for growth.
Yeah,
it
that's
is a big
a shift then. So stick with buy the dips, but maybe buy the dips in terms of buying value instead of growth.
Yes.
But the growth stocks seem like they're the ones that you have the biggest discount from where they were. They've come off the most from their highs, haven't they?
Well, valuations were much higher though. So
no, I know, but some of the growth stocks are almost in value territory, you know, in light of how much growth they're expected to still have, aren't they? How do you tell a value from a growth stock at this point, since the growth stocks have come down?
Again, looking at forward earnings, I think is the key. Is seeing. So if you look at the different sectors of the economy, where you're at, the only sector you're actually seeing accelerating earnings is in the energy market. So yeah, growth has outperformed value even post correction by 3 times since the election. So growth stocks have compounded around 28%, value around 9%.
How does that sound to you, Victoria? You're just nodding, or you're going, "Wow, this person has no idea"? What do you think?
No, I think Leah has a good point. We've actually trimmed a little bit with some of our positions over the past couple of weeks, but we've used that opportunity to find some stocks that did have some good value. We added a little bit to our Alphabet position. It was an existing holding for us. We saw the valuations in an opportune time. We went ahead and added a little bit to that. But we're also holding some in cash. We're not in a big hurry to put a bunch to work at this point in time. We're willing to bide our time a little bit, find the ones that we think give the most value, and invest that way.
Victoria, is the Fed issue for markets now kind of at least on ice, and we can focus back on fundamentals and particularly earnings season?
You know, Wilfred, I think earnings are really going to take center stage going forward. Obviously, as you know, we've got Citi starting on Monday. That's going to really kick off earnings for us. And I think the fundamentals are going to come back into what most people are thinking about. But we have to keep the Fed in mind as well, only because I really think we have still a disconnect on the Fed, which can still bring some volatility. I mean, we had Powell yesterday speaking and continued to say, you know, they were going to be cautious, they were going to be patient. But then you have Rosengren come out and he says, I think the market has it wrong, and we're going to have to hike rates. So I think there's still some disconnect there. I think there's going to be more volatility from the Fed, but fundamentals should take over for the next few weeks as we have the big earnings come out and really help us decide how growth is going to go over the next quarter.
So Rosengren said that, and I read it, he said he thinks Powell's going to be proven right, that the economy is still strong, stronger than people think. So as we go into this year, it's 2019, as we go into 2019, we're still going to get those 2 or 3 rates that he promised because he's going to be proven right about the economy. So Rosengren is still in that mindset that regardless of inflation, if the economy, let's say that the inflation actually even looks less likely to rear its head, just from a strong economy, does Rosengren think we need to raise rates, Victoria? And does that make sense? Do you think so? Just one follows the other, good economy, raise rates?
I mean, inflation is the reason most people are saying we don't need to raise rates at this point, along with slowing global growth, right? But we have to look. Average hourly earnings went higher.
Good.
If that continues to go higher, then perhaps we see some of that inflation come in. We've got CPI numbers coming out, so we'll see how the headline number is there. But I think we're actually going to see a couple hikes this year. I think we'll see one maybe towards the end of the first quarter. And then I wouldn't be surprised if the economic numbers stay where they are now and we stay pretty consistent. I wouldn't be surprised to see another hike later towards the end of the year. So I think Rosengren does have a leg to stand on here because of the GDP numbers that we're seeing, although we know JP Morgan came out and said the shutdown may bring that back a little bit. We have a strong labor market. The consumer continues to be strong. So I think we can see a couple more hikes.